The Central Bank of Nigeria will conduct its bi-weekly retail FX auction today. Now, traders at Axis Bank said they expect activities at the Treasury bills and bond markets to be mute as banks fund their obligations. Ebube Uneze, team member at Treasury at Axis Bank, joins me now for some market updates. Ebube, thank you for taking the time out to join us today.
Thank you, Esther, for having me.
Before we talk about what's going on at the market, I'd like you to just quickly just share some comments on the outcome of the MPC meeting and if there's been any impact on the markets, how investors are processing that rate hike.
All right, thank you, Esther, for having me. So on Tuesday and Wednesday, the MPC conducted the 291st Monetary Policy Committee meeting. At the meeting, members elected to increase the MPR by 50 basis points to 18.5% from 18%, and they also voted to retain all other parameters as is. That is, the asymmetric corridor retained at plus 100 basis points and minus 700 basis points around the MPR, retaining the CRR and liquidity ratio at 32.5% and 30% respectively. We had anticipated this increase based off on the recent inflation figures for April that were released, wherein we saw a 0.18% increase in inflation from 22.04% to 22.22%, largely driven by increase in food prices. The market has not reacted adversely to this, as this has been expected. We had also anticipated that the increase in MPR would not be as aggressive as we saw in the last MPC, owing to the recently released GDP figures, which saw a decline from 3.25% in Q4 of 2022 to 2.31% in Q1 of 2023. So overall, in all this, we anticipate that there will be a slight increase in the money market rates. However, we are still yet to see this implied in the yields for these securities.
Right. I'd like you to also bring us up to speed on just some of the action at the markets. In your notes, you did mention that investors are eyeing the newly issued one-year Treasury bills. Could you tell us more about that?
Yes, thank you for having me. So this week, on Wednesday, we saw the DMO conduct the NTB auction. At that auction, they offered a total of 180.4 billion across the standard maturities. The auction was oversubscribed to 811 billion naira. Consequently, we saw the stop rates reduced by 221 basis points on the 91-day bill to 2.29%, 145 basis points on the 182-day bill to 4.99%, and 100 basis points to 7.99% on the recently issued one-year bill. So the unmet demand filtered into the secondary market, and we saw a lot of demand skewed towards the recently issued one-year Treasury bills with trades consummated at 7% levels. At the money market space, opening the week, we saw system liquidity open in a repo of 8.09 billion. However, due to the FAC inflows which are received during the week, we saw money market rates trend downwards to around the 11% handles, closing at 11.25% and 11.5% for the OPR and overnight rates, respectively. And the bond market has been more of a bullish sentiment, buoyed by the FAC inflows which came in this week, albeit improved levels of system liquidity. We've seen a lot of activity at the short end of the curve and at the long end of the curve. At the short end, particularly on the 2026, 2027, and 2028 papers, while at the long end, we've seen activities at the 2042 and 2050 papers, which are currently trading at 13.69 and 13.8 and 15.8 rather percent respectively. In the FX markets, demand continues to outweigh supply. We've seen the NIFEX depreciate by 67 kobo from opening week's level to close at 463 naira 67 kobo to $1 at the I&E space, whereas we've seen the NIFEX depreciate slightly by 20 kobo from the week's opening levels to close at 465 naira to $1 as at close of business yesterday.
Okay, what is your forecast for the new week, especially around the liquidity levels?
So for the new week, we still expect liquidity to still be at elevated levels. We have an UMO bill maturing on Tuesday of about 220 billion, and we expect liquidity to still remain at the same levels as at this week.